please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You've joined us on Business Lunch. I'm Nisha Podar and with me is Mangalam Malu. Mangalam, good afternoon. Markets off the low point of the day, but it's not looking strong at this point. Nifty 50 just about flattish and 10,750 level is what it has managed to just hold on to. It's the Nifty mid-cap space as well as Bank Nifty which is really underperforming. The frontline indices really not participating. Reliance Industries after a stellar run in the last few trading sessions is one of the least amount of contributors today, in fact, has been on a drag. So that's one counter which is pulling down Nifty 50 at this point. But the other laggards which were really losing steam in the last few trading sessions are the ones picking up steam like Bharti Infratel, Sun Pharma, Mahindra & Mahindra. But in focus today would be the oil and marketing space. That particular area is in focus because of the Opec meet outcome, which is expected shortly, Mangala.
Absolutely. So, yesterday our markets did nothing and we were outperforming the globe. Today our markets did nothing. We are underperforming the other Asian peers as we speak. The mid-cap index, though, has recovered just about 13 points in the red. So just keep an eye out on Century Textiles. That one's moved to the high point of the day. Along with that, we have REC and PFC, which have moved higher too. So as we speak, the global markets, they're doing slightly better than our markets. But remember, yesterday, they underperformed our markets as well. So barring Nikkei, most of the Asian screen is in the green, and the European markets too have opened. The frontline indices at least have opened fairly in the green. So we will keep an eye out on these markets, but our markets not doing anything, primarily because yesterday also they did not do anything, at least for the larger part of yesterday's trading session. We will watch out for the crucial OPEC meet where all eyes will be. It's underway in Vienna. CNBC's Steve Sedgwick gets us the latest.
Iran seems to be the key here as well. Russia, Saudi Arabia are working very closely, and we've heard enough about this bromance at various levels between MBS and Putin, between Khalid al-Fallah and indeed Alexander Novak, and at various levels we understand institutional frameworks that a longer-term cooperation between Russia and Saudi, Russia and OPEC are taking place, and maybe we'll hear some more about that later on as well. But the fact of the matter is OPEC is divided amongst itself as well. There are all kinds of nuances, but of all of those, the key issue is, can Iran be brought along with the others and agree to some form of exit strategy, i.e. increasing production. Now, Iran doesn't have that many cards. This is a very important point, and a lot of the protagonists know that Iran doesn't have many cards, but one thing they can do is say, we are not going to agree to unanimity. We are not going to go along with this. And we thought earlier in the week, of course, and we'll get some tape in a second, that Iran wasn't on board. Then the last couple of days, we thought Iran was on board. And yesterday, at events where he was invited to the Joint Ministerial Monitoring Committee, which is the second of 4 meetings we've got this week. I mean, it's just a crazy number of meetings, too many in many ways, actually. He came along and he stormed out after 1 hour saying it just wasn't working for him. We understand he held an off-the-record briefing late last night where he railed against the situation as well. So he doesn't have that many options today as well.
All right. Thanks so much for that update from Vienna. And that's going to be a crucial meet. And its outcome is going to really impact global trade and India's fisc as well. All right. Move on to something that has been on top of our agenda today. And that is the IDBI Bank. And take a look at that particular stock. In fact, when the news came in, it really went up, but has lost a huge amount of steam. What we are talking about is that sources tell CNBC TV18 that LIC is in discussion with the government to pick up stake in IDBI Bank. Kritika Saxena, my colleague, joins in with all the details. Tell us, Kritika.
Well, early this morning, and you were talking about the stock zooming in trade. The reason it did that is because there were reports that LIC may pick up a controlling stake. Now, we have spoken to multiple sources. What we understand is that, yes, there is a conversation between the government and LIC at this point for a stake in IDBI Bank, but it hasn't reached the stage of finalizing on exactly what quantum, whether it's controlling or not. Having said that, we understand that for now, these are exploratory talks. LIC, from what we understand, is talking about a possible minority stake. If they do go ahead with it, it will be a significant minority stake, and that typically suggests below 15%. It doesn't mean that it's going to be a 40-odd% as the reports have suggested. But what we do understand at this point in time is that it has reached the stage of the Investment and Strategy Committee. So just to give you a perspective about how this works in LIC, as per the basic procedure, the Investment and Strategy Committee first looks at all prospective proposals, investment proposals, and even those of PSBs and public sector units. And this has reached the Investment and Strategy Committee proposal yet. If the committee clears it, they will make a proposition to the board. This hasn't gotten to the board yet. If the board then clears it, then they will go ahead and take the talks to the point where they will discuss the quantum. So at this point in time, these are exploratory talks. It hasn't reached a finalization stage, and it will take many months before we actually see this headway being made. And remember, as per the norms, LIC does not typically hold beyond 15%. Their investment strategy has not been to take controlling stake anyway. So they have 11% stake already in IDBI. They may hike this yet, but we don't know exactly by how much, and it's unlikely that it would be controlling.
All right, Kritika, thanks a lot for that. We will watch out for that stock and that story as it develops. But let's move on to a top corporate voice. We spoke with Bharat Forge Chairman Baba Kalyani, and he says that the demand situation is improving, adds that most companies are running at full capacity. Listen in.
Beginning to see people running out of capacities and therefore adding capacities, putting in capex. So we are beginning to see this across many sectors. We ourselves are started our own capex cycle, expanding capacities, because we are running almost in many areas to full capacity. So yeah, it is beginning to happen. I think overall picture in the economy is good, the demand is good, the growth is good. So I don't see why the capex cycle won't pick up. We are setting up almost a 400 crore expansion out there, and that will increase our revenue, overall revenue in 2 years by almost 1,000 crores. And we have orders to cover that kind of revenue. You know, there is no let up in growth. We see growth coming in many different directions. Even the defense sector is beginning to generate business for us, both in India as well as abroad. And in the next few years, that sector will generate a lot of growth for the company.
All right, markets really holding on, and Nifty 50 holding on to the 10,750 mark. With that, we'll slip into a short breather on the show. But up next, Tata Motors is in focus on the back of its first ever JLR Investors Day today. More on that when we return.
Welcome back. It's some bit of recovery as far as the Nifty, Sensex and the mid-cap index is concerned. In fact, the mid-cap index is now moved into the green. You have 18,500 on the mid-cap index as we speak. The Nifty back to virtually in the green, just about 3 points in the red as we speak. What's pulling its weight or putting its weight behind Nifty is ITC, which has moved to the high point of the day. And in the mid-cap index, we have the Friday favorites, Godfrey Phillips as well as United Spirits. Both of them have moved to the high point of the day. Smoking, drinking, not recommended, but these are stocks which move on a Friday. But take a flight on Jet Airways, that stock out of F&O ban ahead of expiry week. That one for most of this series was in F&O ban, and as it's come out, the stocks moved to the high point of the day as well. So while we're talking stocks, let's talk about Tata Motors as well. In focus today as they are having an analyst meet. Sonia Shenoy joins us to tell us what is expected out there. Sonia.
Well, it's the first ever Jaguar Land Rover Investor Day organized by the management, and that's why the street is very excited. It will happen at the Castle Bromwich plant in UK, and most importantly, the new CFO P. Balaji is making all efforts to be more investor friendly and increase shareholder disclosures, and that's why the street has taken it quite positively. Now, this is a platform to meet all the various business vertical heads in the Jaguar Land Rover profile, something that hasn't been done in a very long time. They will talk about the electrical vehicle foray, also about the I-Pace and how that rollout will pan out. Cost cutting, capital allocation prudence is something else that they will speak about. They will also outline how they plan to meet that Jaguar Land Rover EBIT margin guidance of 8 to 10%. So a lot of focus on Tata Motors in trade today.
All right, thanks Sonia for getting us all the details. Moving on, we learned from sources that 16 lenders look to sell around 44,000 crore rupees of their non-performing assets. Ritu Singh gets us those exclusive details. Ritu, good to have you on Business Lunch. Now, what is the timeline we are looking at, and could this be a phenomena ahead of the results really getting declared or end of a particular quarterly result as well?
Well, you know, this is quite unusual because typically it is in the last quarter of the financial year that banks look to offload, non-performing assets to ARCs. But this time around, it looks like that trend is completely reversed with as many as 16 lenders that we have been able to gather so far looking to offload 44,500 crore rupees of non-performing assets in the first quarter itself. In fact, most of these sales have come up in the last 2 weeks itself. The largest portfolio that is being offloaded is from IDBI Bank, which they had disclosed in their earnings as well, of over 21,000 crore rupees, followed by Bank of Baroda looking to sell about 7,407 crores, IDFC and Canara each looking to sell 3,000. There's also Punjab National Bank with 1,650, and the list goes on, whether it is UCO Bank, Union Bank. I mean, all these names are on your screen with how much they're looking to sell, really. What is interesting to note is, again, as a theme that we've been seeing through this year, a lot of NCLT cases also feature on this list, clearly showing, signs that lenders are not so comfortable with the IBC resolutions and would rather offload assets to ARCs in a bid to recover dues, especially as litigations delay cases and they're losing more and more money as they hold on to these assets.
All right, Ritu, hang in there. Another story that you're tracking is the RIL JM Financial ARC Consortium, which got a nod from the Committee of Creditors for their proposal for Alok.
Yeah, that's right. I mean, they're second time lucky. It's mostly because the IBC amended norms are now in their favor. The first time around, the bid got rejected because it did not get the requisite 75% votes. But this time around, with the amended laws, the required votes to pass a resolution is only 66%. And that Reliance and JM Financial ARC Consortium has been able to secure. The voting started yesterday and will end today. We understand that so far they've received over 70% votes. So in all, probability, in fact, it's pretty much certain that the resolution has been passed. The offer stands at 5,050 crore rupees, of which 4,000 crores is the repayment to lenders. But do remember, the debt on Alok Industries is 29,000 crore rupees. So although this is a close, successful resolution, there is a large hit that the bankers will have to take.
Oh yes, there's a large hit by the bankers, but what we have averted here clearly is a liquidation, and resolution is what has succeeded once again in this case. Okay, let's slip into a break at this point, and up next we get you an excerpt of an exclusive chat with Sudeep Ghosh, the newly appointed CEO at... Welcome back and take a look at the markets. In fact, all the indices, frontline indices, are in the green at this point. In fact, it's looking much healthier. 10,760 levels have been conquered by Nifty 50. It's above that at this point. ITC is giving a huge amount of support. The banking lot has also come back with good gains being seen by Axis Bank and Yes Bank. Take a look at those two counters closer to the high point of the day, and State Bank of India is also doing well. Mid-cap index, that one is flirting between the red and the green at this point, but flattish and not showing deep cuts. Adani Ports, that one has lost momentum, so some bit of drag coming in from there, and another pocket to be watched out very, very closely ahead of the nervousness and uncertainty around the OPEC meet and the outcome ahead of that. The oil marketing companies, so HPCL, BPCL, have really dragged to the low point of the day, and that is one area which will be on our watch list at this particular point. Let's take it straight to our CNBC TV18 exclusive, and Mangalam, well, he caught up with the recently appointed CEO of VIP Industries, Sudeep Ghosh, and began by asking him if the net profit increase to 500 crore rupees is an achievable target for VIP in the next 5 years.
If the sales go up, the profits go up. That's just as simple formula as that. So there is, we can definitely achieve the percentages that our chairman said. The whole segment that we are targeting, which is above 6,000, is a segment that we have never operated. We have launched something called the Carlton Edge, wherein we have started selling products which starts at 12,000 and ends at 45,000. Those are high volume, high value products for us. The moment we do start doing volume in that, immediately the EBITDA starts looking better for us. And I think it is absolutely achievable, and I don't see any reason why we should not.
In that case, what happens to your margins?
Actually, the margins are on pressure a little bit because when the dollar is getting stronger and the rupee getting weaker.
8% is the price hike that you roughly took all of last year across tranches. Is that kind of quantum expected in this year as well?
Yes, could be between 5 to 8%. That's something that we definitely plan to take. And Could be a little more also, because depending upon how the dollar behaves.
All right, so in that case, where does competition come in? Because at the lower end, you have Safari, which is relentlessly competing in that segment. At the higher end, you said there are the Samsonites of the world. Middle level also, I mean, there has been the relaunch of American Tourister. Will you be able to take the 5 to 8% hike as well as hold on to your market share?
I've never felt the competitive pressure when it comes to price hike. Our distribution is very, very strong. Our brands are very strong. I think Samsonite is #1 in everywhere else in the world except for India. We control almost 60-65% market share wherever there are data points available. The modern trade, which can give us data, that is where we find that we have more than 60-65%.
But aren't competitors edging into or eating into your market share?
They've been trying for the last 5 years. They've not been able to.
So you've gained market share in the last 5
yes,
years?
Of course.
How much?
Absolutely. So we would have been about 50-52%. We have definitely crossed 60% in the last 5 years. So I don't think getting market share is a problem.